The world of finance is abuzz with a curious trend. Billionaires are quietly amassing farmland. It's a phenomenon that's piqued the interest of seasoned investors and casual observers alike. What do these titans of industry know that we don't? Are they privy to some secret knowledge, some hidden gold mine lurking beneath the soil? The answer, as we'll uncover in this exploration, lies in the timeless allure of farmland, an asset class that has weathered economic storms for centuries. For those accustomed to the fast-paced world of stocks and bonds, the shift towards farmland might seem perplexing. Yet, beneath the surface of this seemingly antiquated investment lies a bedrock of stability and growth. It's a world where tangible assets reign supreme, where the cycle of seasons dictates returns, and where the demand for food supersedes the whims of Wall Street. As we delve deeper into this intriguing realm, we'll uncover the motivations driving billionaires like Bill Gates and Warren Buffett to invest heavily in farmland. We'll explore the economic forces that make farmland a resilient and potentially lucrative investment, even in times of uncertainty. And finally, we'll provide a roadmap for everyday investors seeking to diversify their portfolios and tap into the hidden potential of this often overlooked asset class. The traditional investment landscape, dominated by stocks, bonds, and real estate, often feels like a high-stakes game. But what if there was an alternative path offering stability and significant returns? Enter farmland, an asset class increasingly favored for long-term wealth preservation and growth. Farmland has quietly outperformed many traditional investments, generating consistent returns. Unlike the volatile stock market, farmland offers permanence and a connection to food. People will always need to eat, regardless of economic conditions. As the global population grows, so does the demand for food, increasing farmland values. Farmland acts as a natural hedge against inflation. As the cost of goods rises, so does the value of the land producing our food. Farmland represents ownership of a tangible asset, a piece of the earth itself. This inherent value, coupled with the increasing scarcity of arable land, makes farmland an attractive investment. Investing in farmland might seem daunting, but it's more accessible than you think. Images of old estates create a perception of exclusivity. Today, various avenues exist for all investors. REITs and crowdfunding platforms offer accessible entry points. These options provide passive income and potential appreciation. LLCs offer tax advantages and asset protection. Unlock the potential of farmland investment in your portfolio. When investment icons like Warren Buffett and Bill Gates speak, the world listens. Buffett champions farmland as a strategic asset, a tangible resource with inherent value. Gates, the largest private farmland owner in the U.S., sees it as crucial for global food security. These billionaires recognize a fundamental shift in the investment landscape. Farmland offers stability and resilience tied to our need for food. In the realm of economics, the concept of scarcity reigns supreme. Simply put, the more limited a resource, the greater its potential value. This principle applies perfectly to farmland. As the global population continues its inexorable climb, the demand for food rises in tandem, yet the amount of arable land remains finite, constrained by geographical limitations and environmental factors. This fundamental imbalance between supply and demand underpins the long-term investment thesis for farmland. Unlike stocks or cryptocurrencies, which can be created and multiplied in the digital realm, farmland represents a tangible asset with inherent scarcity. This scarcity factor, coupled with the ever-increasing demand for food, creates a compelling case for farmland as a strategic investment. Moreover, the urbanization trend further exacerbates this scarcity. As cities sprawl and populations migrate towards urban centers, fertile land is often sacrificed for concrete jungles. This conversion of farmland for other uses further diminishes the available supply, placing upward pressure on the value of remaining agricultural land. The implications of this dynamic are profound for investors. Farmland, in essence, becomes a piece of a shrinking pie. As the pie gets smaller and the demand for slices increases, the value of each remaining slice inevitably rises. This simple yet powerful principle underscores the long-term growth potential of farmland as a strategic asset class. In uncertain times, investors seek stable assets. Farmland, with its intrinsic value, offers a hedge against inflation. As the cost of goods rises, so does the value of farmland. Farmland provides a steady income through leases, offsetting inflation. Unlike commercial real estate, farmland leases are more stable. Farmland combines capital appreciation and income generation, making it an attractive investment. While the financial incentives of farmland investment are undeniable, there's a growing awareness of the ethical dimension as well. Investing in farmland isn't just about generating returns. It's about participating in a system that sustains us all. As the global population swells and climate change threatens agricultural yields, the importance of food security looms large. Billionaires like Bill Gates aren't just buying farmland for profit. They're investing in sustainable farming practices, technological advancements, and infrastructure improvements to enhance global food production. They recognize that feeding a growing planet is not just a humanitarian imperative, but also a sound investment strategy. For ethically conscious investors, farmland offers a unique opportunity to align their portfolios with their values. By supporting sustainable farming practices and promoting food security, investors can contribute to a more equitable and resilient food system while also reaping financial rewards. This growing awareness of the interconnectedness of food systems, environmental sustainability, and investment opportunities is driving a new wave of impact investing in farmland. It's no longer just about maximizing returns, it's about investing in a future where everyone has access to nutritious and affordable food. In finance, farmland stands apart as a tangible asset class. Unlike stocks or bonds, farmland is rooted in the physical world, offering comfort and profit. While stocks can swing wildly, farmland remains tied to supply and demand. People will always need to eat. Farmland offers diversification, often uncorrelated with traditional markets, making it an attractive option for reducing portfolio volatility. The allure of farmland goes beyond its tangibility and diversification benefits. It's also about the potential for attractive returns. Historically, farmland has demonstrated an impressive track record of generating returns that rival or even surpass those of stocks and real estate, all while exhibiting lower volatility. Over the past few decades, farmland has consistently delivered annualized returns in the range of 10 to 12%, outpacing the S&P 500 in many years. This consistent performance, coupled with its relatively low correlation to the stock market, makes farmland an attractive option for investors seeking long-term capital appreciation. But the potential for returns extends beyond simple appreciation. Farmland also generates income through lease agreements with farmers, providing investors with a steady stream of cash flow. This rental income can provide a hedge against inflation and enhance overall returns, making farmland an attractive option for both income-seeking and growth-oriented investors. Furthermore, farmland benefits from several tailwinds that suggest its strong performance is likely to continue. The global population is projected to reach nearly 10 billion by 2050, placing increasing pressure on food production and driving up demand for arable land. This demand, coupled with the finite supply of farmland, creates a compelling case for continued appreciation in land values. When economic storms gather and markets tumble, investors seek refuge in assets that can weather the turbulence. Farmland, with its historical resilience and intrinsic value, has consistently served as a safe haven during periods of economic uncertainty. Unlike stocks and bonds, which can experience dramatic swings in value, farmland tends to hold its value or even appreciate during market downturns. This resilience stems from the essential nature of what farmland produces, food. Regardless of economic conditions, people still need to eat. In fact, during recessions, demand for staple crops often increases as consumers cut back on discretionary spending and focus on essential goods. Moreover, farmland is less susceptible to the speculative bubbles that can inflate and burst in other asset classes. While tech stocks or cryptocurrencies can experience meteoric rises and precipitous falls based on investor sentiment, farmland values tend to be more grounded in the fundamentals of supply and demand. This inherent stability makes farmland an attractive option for investors seeking to preserve capital during times of economic uncertainty. By diversifying into farmland, investors can potentially reduce overall portfolio risk and create a more resilient investment strategy that can withstand market fluctuations. In the often turbulent world of finance, where market swings and economic uncertainties can keep investors on edge, farmland stands as a beacon of stability. Unlike the roller coaster ride of the stock market or the speculative frenzy of cryptocurrencies, farmland offers a sense of permanence and resilience that is deeply appealing to those seeking a safe haven for their capital. The reasons for farmland's stability are deeply rooted in its essential nature. Food, the lifeblood of humanity, is the ultimate tangible asset, immune to the whims of market sentiment or the fluctuations of interest rates. While tech companies can rise and fall and financial markets can experience booms and busts, the demand for food remains a constant, underpinning the enduring value of farmland. Moreover, farmland is subject to different risk factors than traditional asset classes. While stocks and bonds are vulnerable to interest rate hikes, inflation, and geopolitical events, farmland is more influenced by factors like weather patterns, soil quality, and advancements in agricultural technology. This unique risk profile makes farmland an attractive option for investors seeking to diversify their portfolios and reduce overall risk. By allocating a portion of their assets to farmland, investors can potentially create a more balanced and resilient portfolio that can navigate market volatility and economic uncertainty with greater confidence. Farmland is emerging as a strategic asset of paramount importance. No longer viewed solely through traditional agriculture, it's recognized for global food security, environmental sustainability, and long-term wealth creation. This awareness is fueling a green gold rush as investors seek to capitalize on farmland's potential. Driven by population growth, urbanization, and demand for food, fiber, and biofuels, farmland is poised for appreciation and income generation. Investing in farmland is an investment in the future, supporting sustainable farming practices and agricultural innovation. The secrets of farmland's performance lie in the fundamental connection between humanity and the land. Those who recognize its enduring value and invest in this vital asset class are poised to reap the rewards of a green and prosperous future. Farmland's promise of stability and growth is capturing investors' attention. The journey from Wall Street to fertile fields might seem daunting, but it's more attainable than assumed. Today, various investment avenues cater to different capital levels and risk tolerances, democratizing access to this asset class. Whether you're an experienced investor or a novice, farmland investing offers options tailored to your financial goals. From direct ownership to fractional investments through REITs and crowdfunding platforms, there's a path for every investor. In the following sections, we'll explore these investment avenues, their benefits, and considerations. Navigate the exciting world of farmland ownership and unlock its hidden potential. Direct ownership, seeding your wealth in the soil. Direct ownership offers control and customization, involving purchasing a parcel of farmland outright. You can handpick the type of farmland, location, and crops, aligning with your preferences and risk tolerance. However, it requires a deeper understanding of the agricultural industry and significant capital outlay. The illiquidity of farmland means converting your investment back into cash can take time. Despite these considerations, direct ownership provides satisfaction and a tangible link to the land. Witness firsthand the fruits of your investment as crops grow and harvests yield returns. REEs, reaping the rewards of farmland without the rows. For a more passive approach, real estate investment trusts REITs offer a convenient entry point. By investing in a farmland REIT, you gain exposure to a diversified portfolio of farmland assets. REITs provide liquidity, as shares are traded on stock exchanges, making them easy to buy and sell. They offer passive income through dividends, enhancing overall returns. However, REIT returns can fluctuate with the broader stock market. Approach farmland REIT investments with a long-term perspective as part of a diversified portfolio. Crowdfunding, cultivating your portfolio with fractional ownership. Crowdfunding has opened up farmland investing to a wider range of investors. Platforms connect investors with vetted farmland projects, allowing fractional ownership. Investment opportunities range from a few $1,000s, lowering the barrier to entry. Crowdfunding platforms handle land acquisition, due diligence, and property maintenance. Investors benefit from capital appreciation and passive income through lease agreements. Conduct thorough research and diversify your investments across multiple platforms and projects. The power of the collective, joining forces in farmland syndicates. Farmland syndicates offer a solution for amplifying investment potential while sharing responsibilities and risks. A syndicate is a group of investors pooling resources to acquire and manage large agricultural properties. Structured as limited partnerships, they leverage the expertise of experienced farmland managers. Syndicates offer access to larger properties, economies of scale, and diversification benefits. Carefully vet the general partner's track record and fee structure before committing capital. Joining a syndicate can unlock opportunities not accessible to individual investors alone. Tax-efficient harvesting. Structuring your farmland investment. Maximizing returns involves selecting the right assets and structuring ownership tax-efficiently. Farmland investments offer unique tax advantages, enhancing after-tax returns. Structuring ownership through an LLC provides liability protection and pass-through taxation. Farmland investments often qualify for various agricultural tax deductions and exemptions. Consult with a qualified tax advisor to determine the most advantageous ownership structure. Proper planning can significantly enhance your long-term investment returns. Sowing the seeds of generational wealth, a legacy in the land. Farmland represents stability, growth, and a profound connection to the earth's bounty. It's a tangible link to our past, a source of sustenance for our present, and a legacy for future generations. Farmland embodies permanence and a connection to something real and enduring. Investing in farmland is akin to planting a seed that grows crops and a legacy of financial security. Recognize the land as a treasure to be stewarded and passed down through generations. Embrace farmland as a core component of a diversified investment portfolio for a sustainable future. The future of investment where sustainability meets prosperity. Farmland investing is a beacon towards a sustainable and equitable future. It offers financial returns and aligns investments with values, supporting sustainable farming practices. Technology and agriculture convergence creates opportunities for innovation and efficiency. Investing in farmland supports sustainable farming practices and preserves our planet. The future of investment is about aligning capital with conscience. Farmland investing offers a path for generating financial returns and a positive impact on the world. Reaping the rewards of patience, a long-term perspective. Farmland investing requires patience and a long-term perspective for success. It's a slow and steady journey of wealth creation, appreciating over time. Recognize that true wealth is built gradually, season after season. The land's value appreciates as populations grow and food demand increases. Embrace a long-term perspective to ride out market fluctuations. Focus on the fundamental drivers of value creation, global food demand and the scarcity of arable land. Your journey towards green gold, taking the first step. Farmland investing offers potential, nuances, and allure. From billionaire estates to everyday investors, the path to owning farmland is clear. Invest based on your goals, risk tolerance, and future vision. Choose direct ownership, REITs, or crowdfunding with due diligence. Educate yourself, seek guidance, and evaluate options. Consider your time frame, risk appetite, and involvement level. Investing in farmland is about legacy and sustainability. True wealth includes contributing to a sustainable future.